Greetings, ladies and gentlemen. Welcome to a virtual training webinar hosted by the Department of Veterans Affairs, Office of Small and Disadvantaged Business Utilization, and the Strategic Outreach and Communications Program. Please note, all participants will remain muted for the duration of this session. If you experience any connectivity issues while logged in, we suggest disconnecting and logging in again. If that does not resolve your issue, please use the WebEx dial-in and access code to rejoin the session. This session will be recorded, and a copy of the presentation and link to view the recording will be made available to you within 48 hours. Please take a moment to locate the Q&A panel, the chat window, and the poll feature on the lower right side of your screen. Only use the Q&A window to type in your questions for the panelists. Use the chat feature only for brief networking and introductions and kudos. At the conclusion of today's event, you will be prompted to complete a brief survey. We greatly appreciate your feedback. Please note, the participation of any commercial entity in the VA outreach and training programs does not convey or imply that the U.S. Department of Veterans Affairs directly or indirectly endorses any products or services provided or to be provided by the commercial entity, its successors, assignees, or licensees. Furthermore, the Department of Veterans Affairs does not warrant any services that may be provided by the commercial organizations listed. Before we begin, we welcome Mr. Curtis Brandon with Strategic Outreach and Communications, Program Federal Lead of the Direct Access Program, who will provide opening remarks on behalf of VA OSDBU, and he will introduce our presenters for today's webinar. Good afternoon, Mr. Brandon, and welcome.
Thank you, Yvetta. Greetings and good afternoon from the Department of Veteran Affairs, Office of Small and Disadvantaged Business Utilization. On behalf of our leadership, we thank you for your participation in today's virtual training webinar. VA OSDBU remains committed to employing innovative methods to promptly inform you about relevant procurement opportunities, training, and information. Virtual events we conduct would not be possible without the support of industry partners and programs like GL Solutions. We are grateful that Gregory Linus is the founder of GL Solutions, and Angela Linus, who is the subject matter expert, made time in her busy schedule to host today's events. The Strategic Outreach and Communication is dedicated to small business readiness through programs, outreach events, educational, and training. We routinely conduct a variety of engaging online events designed to facilitate meaningful interactions and foster relationships. We encourage all to continue to visit our website to stay updated on upcoming events and valuable opportunities to connect and collaborate. We also extend our thanks to everyone who supports the department in its mission to serve our nation's veterans. Welcome, Mr. Gregory and Mrs. Angela. Thank you.
Thank you, Brandon. I am pleased to be here again, making this presentation called Don't Fear the DCAA, mainly because there are so many issues out there thinking that DCAA is just to scare you and to push you out, etc. So no, we want all of this small business saying that you don't have to fear the DCAA because everything that they want for you is actually very, very, very good for your organization. In essence, you need to have what is called a correct financial management approach to set up your company for success and not only for your audits. This is going to show you, and we're going to see some actual examples in there where you can see that what you need and what DCA is asking is for your company to succeed in business with the government. We are going to have many questions that we are going to be like self-explanatory, and that any of you may have, like, when do I need to set up a compliant accounting system? What are the practices and the strategy to instill from the beginning to ensure that your internal system are consistent with the federal regulations? Remember, in the government, we all follow what is called the Federal Acquisitions Regulations and the agency's acquisitions regulations, and we're going to go through that. What do you should expect from a proper accounting system? Once these auditors come over knocking on the door, whether it's DCAA, and we're going to also see DCMA, the Defense Contracting Management Agency, for an audit, what do you need to do? So we also going to learn the benefits of over preparing, how much that can save you money and time, and to make sure that in your practices you win a contract, okay, with all these practices. Remember, it's a check box, and that's what you want to make sure that you have as many checks as possible. So based on this, let's just move ahead. Angela, can you move to the next slide, please? So in this slide, we want to view two agencies that are sometimes confused between each other. DCAA, the Defense Contract Audit Agency, and DCMA, which is the Defense Contract Management Agency. They are two completely agencies, but sometimes they tend to overlap a little bit in terms of the work that they are doing. And I'm going to give you a good example of how confusing it is. Even one of my clients last week told me, hey, we have a call with DCAA. And as I am in the call, I found out that the call was actually with DCMA. Okay. And that is what I want you guys to normally understand. The items that you see in there as defined are coming over from their own websites. And how do they define? Okay, the Defense Contract Audit Agency provides audit and financial advisory services to the Department of Defense. They are not working for you or anybody else. They are working mainly for DOD in this case. And the Defense Contract Management Agency is also part of the Department of Defense, okay, but they work directly with this defense suppliers to help ensure that the DoD federal contracts and allied government supplies and services are delivered on time, at project cost, and to meet all the performance requirements that are in your contract. They are the one that decides or look over in what needs to be in your contract, and that's part of what we need to do. So as part of the key member, what you need also to understand is that they are working on behalf of the U.S. government. And the U.S. government, believe it or not, belongs to all of us, taxpayers' dollars. And they are the safekeeper or the stewards of all the taxpayers' dollars. So every question that they're going to have is to make sure that your company is spending the money that has been allocated and allotted for you as the taxpayers. So we all taxpayers people can be accountable and says, yes, you are a good company, or no, you are not a good company. Besides these two agencies, and any government contractor can also be audited at any time by the Department of Labor related to labor standards issues, by the Internal Revenue Services. We all know the IRS very well, okay, by any state or local government agency. That is important to understand that, yes, they can audit you on a federal government contract. Any local related business on taxes related, for example, to BPOL. BPOL stands for Business Licensing Taxes that you may need to pay. The Small Business Administration, of course, the SBA, especially if you are in a small business or you are working on any particular set aside category, starting with just a regular small business, women owned, veteran owned, etc. Those are all set aside categories that you can be audited. Your own personal financial institutions, like the bank that is financing you, they may want to have an audit on you, and you may need to explain all these issues. And if you have more than one shareholders, okay, investors and lenders, they may have an interest in your business too, and you may want to have that level of an explanation in there. So what is the main issue with an audit? Any audit, even if you are perfectly fine, costs money because you have to pay attention, you have to prepare reports, you need to send them to the correct auditors. So the faster you get those questions answered and the faster you get them correctly, the less risk you have and the faster this audit will go for you. I.e., the faster you get this audit done, not getting rid of the auditors, is getting the audit done. Not only you are better off with in the face of the government, but you are also facing money because you would need to take time from the space, from the current contracts and actions and tasks that you may have in order to support these issues with an audit. Therefore, that's why we are presenting this so you can ace not just the DCAA or DCMA, but any audit and have clear and good explanation because sometimes they are linked to each other. For example, we are talking about here the Department of Labor. That's the very first one that I listed in there. I have been many times with DCAA auditors that tell me, oh, this is what you need to do. And I have to remind them, no, we cannot do that because that goes against the rule of the Department of Labor. And vice versa, the Department of Labor sometimes tell you this is what you need to do, and you need to remind them that you are also regulated by the Federal Acquisition Regulations, DFARS, etc., on any other specific agency regulations in there. One thing that I forgot to tell you at the introductions, okay, is I do have an accent because I was not born and raised in the United States. I was born and raised in the Dominican Republic. And if you have any question understanding my accent, please feel free to ask that within the questions or request that I repeat that information too. I don't mind. I actually like it in that sense. Okay, the next slides, Angela. So, understanding for whom DCAA and DCMA is working for, it is extremely important. For example, in this graph, what you see there is the federal tax revenue and spending, how it's divided and how the money is spent. Once you get a contract, you are part of those expenditures. Once you pay your taxes, whether it's the company taxes or your personal taxes, you are part of the U.S. government revenue. Okay, so when you take a look for DCAA and DCMA, their clients is the U.S. federal government. This means that these two agencies have a client too, and that they have to report to, and they report even to the Congress. There are congressional reports that they have to go over, and they have to justify all the money that is being given, okay, to a contract, like to your company, and if it's well spent or not. All of this is extremely important because remember, you are spending taxpayers' money. So not only the government get in trouble, but you can also get in trouble. Okay, so most of these contracts needs to be accountable to these agencies to make sure that the money is spent wisely and on behalf of the government. In general, all federal agencies, and defense or not, must follow the exact same process. Usually, for example, HHS have their own agency within HSS that does the same work as the DCAA. There are some other agencies that they may not need that much work, and what they do is that they contract out their audit needs to DCAA, as example. But DCAA, with defense contract being the largest one, have the tendency to be the one that makes the best interpretation on different FAR, DFAR regulations, etc. And that what you may need to know and understand as part of these regulations. Take into account that this is not just for the prime. When you are a subcontractor, you also have to be assessed, audited, and address all the issues for DCAA and DCMA. Yes, they can come over knocking on your door for those issues. There is what is called in the part of the Federal Acquisition Regulations of FAR, what we call the pass-through clauses. If you are familiar with the FAR, any FAR clauses that start with the FAR 52 dot something are part of what is called the solicitations and provisions and clauses incorporated by references. They are not gibberish. Get your FAR book and read them to understand them very well. They are very long. They were written by attorneys. Sometimes it's kind of hard to understand, but that is what you have as part of your regulation. Many people say, yeah, but I only saw there, just one sentence. Well, that sentence has a strong meaning within the FAR or the DFAR. And by the way, anyone can download the FAR and the DFAR completely free from the acquisition.gov website. That is something that is extremely important. You do not have to pay anyone to get access to the FAR. It is 100% free. Take into account that sometimes some subcontractors, when you are hired, because you have great technical quals, the prime contractor may not have a good contracting office, and they may not pass along some of these items for you. So does that mean that you are exempt? No. The government is expecting you all the time to know and understand all these issues, and you wanted to be subject to a lot of these requisitions, regulations, and items, because at some point in time and as soon as possible, you also may want to be prime and you want the government to say, we wanted to do more business with this company. That is the main issue about understanding all the solicitation. So moving now to the next slide, there you have the discretionary outlays of the budgets, okay, in terms of how it's normally spent between defense and non-defense. Yes, notice that the defense is $751 billion, while the non-defense is $910 billion for all the other agencies. So if you take a look, the defense alone takes about 40 to 45% of the overall budget. That is what that graph is just trying to tell you, and why the defense is usually the one that leads in the interpretation of those budgets and those issues. So the questions that we have, move to the next slide, please, Angela, is you got your company, you got your systems, you have everything, but how will DCAA, DCMA view my company, in this case, your company, and the management of your company? Remember, everything is management, management, and management. They want to make sure, number one, that your company has a sound financial management policies, procedures, and decision-making process that are aligned with the government objective. What does that really mean? That if you say that you were going to provide some services, some goods, etc., that they are all aligned with what is written into that contract. So when they say we're going to come over and review your accounting system, either do a pre-award audit or a post-award audit, okay, to see how you are issuing your invoices, they are going to be reviewing all those systems that you have set up for your company. DCAA usually it is concerned with identifying and evaluating all activities that either contribute to or have an impact on the proposed or incurred costs that you are billing the contract. And yes, there are certain items that are called the self-audit. For example, the incurred cost submission report is a self-audit that you send to DCAA before they even come to your company. And that is extremely important to know and understand. It's a very complicated spreadsheet that you have to do and complete, but trust me, it's all very good in that sense. And they are going to also evaluate your financial policies, your company procedures, and your company internal controls. When we say internal controls, is like one case that I have a long time ago that an auditor said, we don't want you to distribute a pretty hefty bonus and then, yeah, now let's build the government for that. That's what they do not want. So if you don't have a good internal control procedures and anybody can come into your company, you might be in trouble in there. So they also wanted to know that you are in control of your company costs. And that's why they're going to have major emphasis in your business systems, in your management and policies and procedures, accuracy and reasonableness of the contractor forward pricing and incurred cost representations, i.e., your proposals, and adequacy and reliability of the records and accounting system. The contractor compliance with contractual provisions have an accounting financial significance as the cost principle following, if you are in a small business, FAR 31. If you are no longer a small business, then you have to follow what is called the cost accounting standards as part of the FAR 30 in the Federal Acquisitions Regulations. Okay, and you can look at all that in the FAR 52-230-2. Okay, and the clauses pertaining to the Truth and Negotiation Act. We call it for short the TINA clause. Even if you are on the fixed price or if you are in a time and material, how do you derive your cost to price the government is important. And that is what it goes into the Truth and Negotiation Act or the TINA Act. So it is important to understand that they are not focusing on your revenue. They are focusing on your costs. They want to make sure that all the costs that have been booked into your system, into your project, and that you are calling it direct and or indirect, and we're going to be talking about all of those, are correct and truth into the system. And if during the proposal time you say this person is going to cost me $120,000 a year, they want to make sure that it is within the scope and that it is within the range of that 120. Notice that I'm saying they want to make sure that you are paying 120. It says within the range of the 120. We all know how negotiations goes into the salaries and the issues when it goes in there. So take into consideration that DCAA audits are not just limited to pricing actions and contracts that fall under the FAR Part 15, contract negotiation. To that extent, the CAA's involvement is determined by the type of contract that will be awarded, fixed price, time and material, or cost plus type of a contract. Generally, most of these efforts on the firm fixed price type of a contract take place during the proposal stage rather than during the incurred cost stage. I always tell all my clients the best type of a contracts to have are the cost plus type because the government is taking 100% of the risk into the cost of your contract. Does that mean that we now have a license to bill whatever we want to the government? No. And that's why the government usually audit you more and look over how you are spending the money and how you are controlling those expenditures, okay? Because they don't want to lose control out of that. Can they stop you if they think that you are not doing a good job? Yes, they can. Well, not as directly DCAA or DCMA, but they can issue a letter of recommendation to your contracting officer to say, we have a problem in here. Okay, unless they found that there is an actual malfeasance in there for which you may have pretty bad penalties, including maybe even going to jail for this thing. Okay, the DCA auditors may or may not have the ability to curtail the cost and how you are spending the money, but how this relates to the contracts that you are dealing with. So, in this sense, let's move to the next slide because we're talking a lot about a compliant accounting system, So what is the definition of a compliant accounting system? In the DFAR, which is the Defense Federal Acquisitions Regulation, are actual definitions of what it is an acceptable accounting system. A system that complies with the system criterion paragraph C of this clause to provide reasonable assurance that applicable laws and regulations are complied with, the accounting system and cost data are reliable, and risk of misallocation and mischarges are minimized, and contract allocations and charges are consistent with the billing procedures. Billing means your invoices that you submit. DFAR 252-42-706 also defines a contractor system or accounting for accounting methods, procedures, and control established to gather, record, classify, analyze, summarize, interpret, and present accurate and timely financial data for reporting in compliance with applicable laws. Regulations and management decisions may include subsystems for a specific area, such as, for example, billing and labor. So therefore, the same DFAR requires that there is a proper segregation between direct and indirect costs. Many people get confused. So what is the definition of a direct or an indirect cost? They will tell you a direct cost is a cost that have a single cost objective, and indirect costs have more than one cost objective. That is the actual definition that you're going to find of direct versus indirect cost. Okay, so if you have a system that allocates the cost, okay, and the direct cost, but is not doing a very good job, you may want to make sure that you have this proper segregation of costs. There are also, within the system, you need to identify what is called unallowable costs. The government contracting is based on the premises that they are going to reimburse you all of your costs, except those items that are considered on the Federal Acquisitions Regulation as unallowable costs. You can get a very good summary, about 1 page or 2, about all the clauses under the FAR that are considered unallowable. A good example, if you read the FAR, especially the FAR 31, you're going to find out that there is one FAR clause that to me is probably the shortest one. You know, especially it comes over as unallowable. And it says, plain and simple, alcoholic beverages are unallowable, period. End of that clause, move to the next one. So when you are working for the business, when you are working for any government contractor, and you, for example, decide to take a trip, and in that trip you are having your dinner, and in your dinner you ask for the beer, that beer is not coming from the federal government, because that beer is considered unallowable cost at that moment. So your system, your expense report, and your entire accounting system must segregate those unallowable costs from the allowable costs. Okay? So many people think that does that mean that the government can tell me how to run my business? Not true. Okay? But the government can decide not to do business with you because of the way that you are running your business at that moment. And while all these regulations and items that we're going to be seeing, there is one aspect that is extremely important that you also need to understand. You have to be consistent in how you design your business system and how do you deal with them. Why? You cannot say this applies to this contract, but does not apply to this contract when the circumstances and the issues are exactly the same. You need to be consistent, because sometimes part of what they are looking for is that you have contract A, that is a commercial contract, and then you get awarded a contract B, that is a government contracting. okay, even on a fixed price basis, they may audit you because they want to make sure that the government is not subsidizing your uh, uh, your venture as a commercial activity in that case. So therefore, you need to really understand what we call a compliant accounting system, computerized or not necessarily mean that you need to have it, okay, in a computer. You don't need to spend too much money, but you need to make sure that you have a compliant accounting system, because that accounting system fits your finance, your contract management compliance, your billings, and everything else that you may need to have in there. So take into account that in government contracting, understanding, okay, what your compliance system is the perfect solution, but it can also be less than 10% of all the solutions that you may need. Many people think, oh, I just bought the software, therefore I am done. No, it's not like that. You have more and more issues that you need to make sure that you comply with your accounting system. So let's move to the next slide, Anita. So this slide, I'll just show you some information from the GOTS report that is put together by UNANET every year. If you guys need some information about the GOTS report, send us an email. Our email is at the end of this presentation, and we will be very happy to send you a copy of this report. It's available for free. But as you can see in there, it just show you which of the approved business system have you experienced as being required on a new solicitation per year by DCAA. Notice that DCAA is requesting 34% as always, okay, and then 32% as frequently. So if you add these two, you are at the 66%. And then the 15% sometimes, okay, and some people have said they have never asked for that. So that's what you see, okay? And describe the changes in the government average for your company over the past year, so you can see how are the trending of a lot of these issues, okay, going into. And also in there, you see that at the bottom, you see, for example, okay, some of the areas, once you start reading the charts, you know, with a better understanding on that, okay? So DCAA compliance is really just a simple way of saying to your company, saying that your company and accounting, financials, and timekeeping pools and other intermediate systems, including the allocation and accumulation of cost objectives, are in compliance with the government job cost regulations, accounting regulations found in the Federal Acquisition Regulation. It is important to know that there is no such a thing as a DCAA approved accounting system by DCAA, the government. They do not endorse any software. They do not endorse any system. So you have, and when they say we went over to company X, we reviewed their accounting system and find that it's compatible. It is that company accounting system. It's not the software that you bought. It's not the QuickBooks. It's not the Delta. It's not the UNANET. It's not any one of those areas and items that you need to know. So merely to say that you are doing an audit because you just got UNANET and therefore you are all, that's just even less than half of the system. The software and the tools help you to be compliant, but your system, how you manage it, how you use it, your rules and regulations are key to develop and make sure that you are in compliance. So that is the most important. So the next slide, Angela. This is listed in the GOTS report for 2024. What is a compliant accounting system? Approved business systems are becoming a major differentiators in bid, i.e., if you don't have one, the likelihood that you may not get the contract is pretty high. But if you have one, that means that you are going to get. Now, notice, is accounting system the only one? No. They also going to have issues with the accounting system, your purchasing system, your estimating system, material and management and accounting system, property management system, earned value management. If you do not know what value management and you are especially into the IT, I strongly recommend you that you get very familiarized, because as you grow and you get into more contracts, EVM or end value management will become one of the most important issues in your company in this case. Notice that in the pictures of purchase to the right, you have in there the based on the revenue size, okay, what is the percentage of the solicitations are requiring purchasing system by the company revenue size. So be on the lookout for what you have. To say that this is not important can have severe determination on what you need to expect in the next. So the next slide, we have questions for all of you. Now, based on all these items, and before we go into more details, what is a compliant accounting business system? You're going to get to respond based on the answer, and that is an area that you need to understand. Okay, what? Choose from the options below: A, B, C, or D. A, the accounting system is just a software like a QuickBooks Delta. B, if I purchase something like Delta, the Unanet is compliant out of the box. The salesperson told me that. C, anyone can do a compliance system, even in Excel. D, a compliance system is extremely expensive. Think twice before doing one. What is the correct answer based on yours? And I believe that Anastasia, you will be the one giving us the results after they take a few minutes, okay, into answering that, correct?
Yes, sir. Thank you. If everyone could please put your answer in the chat. A, B, C, or D. Mr. Gregory, multiple responses for C. We have one B, one selected B, but the multiple majority is C.
Yes, that is correct. Anyone can do a compliance system, even if you have it in Excel. So you don't need a QuickBooks, you don't need a Delta, you just need the process and procedures, and you need to make sure that you can follow them. I actually, in a conference that I was sitting down with a DCAA auditor, and he told me that he did found a company that they were using all Excel and they were in compliance with the DCAA accounting system. Very difficult to follow because, of course, the software is what is supposed to help you in doing these things. But yes, the correct answer in there is anyone can do a compliance system even in Excel. That is the correct answer to that. Okay, if you get a QuickBooks or a Deltek or a Unanet out of the box, it's not compliant. You still need to make it a compliant with your company rules and regulations. Okay, and you need to load them in there. It's called the implementation of the system, whether it's QuickBooks, whether it's any one of those. Okay, so they are expensive. Expensive, in my opinion, is a very loaded word, because what is more expensive? That you don't get it, you don't do it, and then you lose the contract, or that you do it, you get it, and then you can get multiple contracts. So then what is the correct terminology to say that the system is expensive? So let's take a look in here. What is my company accounting system? Can you move to the next slide, Angela, please? Thank you. What are the keys to a compliant business system? You cannot rely on the software alone, but you need to make sure that the system follow. Number one, follow GAAP. Everybody knows what GAAP means. Generally accepted accounting principles. The system has to be in what is called the full accrual. That's the basis of a good accounting system. Accrual means that the revenues and the expenses are recognized as they happen, not as you pay them. I noticed that somebody was asking, can I use a QuickBooks? Yes, you can, but take into account that QuickBooks is designed to help you with your taxes. Most of the time, QuickBooks is what we call a hybrid system between accrual and cash system. Therefore, it's not full accrual basis. You can make it a full accrual basis, but it's not by itself a full accrual basis into the system. For example, if you have an employee and the employee is working for you and you have semi-monthly timesheet, by the end of the month, the individual has completed his time, you need to recognize the cost of that employee, even though that you have not paid them yet. And your accounting system needs to show that ability of that allocation. The employee work, and I owe now the employee. There is not yet any cash transactions until you process your payroll. Same thing with a contractor, same thing with a consultant, 1099 or so. Second, most important issue, if most follow, especially if you are in a small business, the Federal Acquisitions Regulations 31, that understanding the allowability and allocation of costs. That FAR 31 becomes like the Bible that you need to follow for your accountants and for all your cost operations. Extremely, extremely important. Notice in the graph that I have below that you have timesheet, human resources, payroll, accounts payable, subcontracting, contracting, business and invoices and purchasing, and all your planners operations, how they interact. But notice that the thin blue lines is almost like a circle because they go and they interact with each other. Third, and more important too, remember, we were talking about direct versus indirect costs. You must have a segregation of direct costs from indirect costs. Direct costs have only one cost objective. Indirect costs have more than one cost objective. For example, we were talking about the payroll. You were talking about that you got an employee and the employee actually worked, and between February the 15th and now the end of February, there is a holiday in there. Does that mean that there is one cost objective? No, the individual may be working for a contract that is a direct cost. The employee took a holiday, i.e. the President Days, that is an indirect cost because you have more than one cost objective, not only paying the cost for the individuals, but also accounting for the fringe that he's earning. He may be working for the G&A in portion or even the overhead, etc. So all these matters needs to be allocated as part of those segregations of direct from indirect costs. And we're going to see an example in a moment of that. Okay, but very appropriate is that you need to have an appropriate way to follow the contract cost, that you are following the clean level. Clean stand is a jargon for contract line item number. If you look in your contract award, it usually goes by clean. Clean 00001, and sometimes you get what is called an SLIN, subcontract line item number 001, 002, or BAB, etc. So all these matters, you need to track it into your contract and into your system to make sure that the government understands how you are allocating the cost. Fifth, and very important, the system must be reliable, i.e., that you can go in there and look exactly how much each item is costing you, the company, the project, the cost, and each clean. And that reliability has to be put in there very clear. And if anybody wants to do any manual calculations about what your system is doing, you can actually sustain it, prove it, and document it at a trace moment. I always said that if you cannot just click to show the result, you do not have that report. We're going to see about what are the issues in there. Okay? So take into account, for example, that in your system for your accounting system for your company, as is mentioned in there, you need to have a timesheet system. And I assuming that most of you guys in here are based on services. Even though that you may be billing good, you still need a timesheet system to allocate the cost that people are spending, okay, in terms of the value added of your products and or services. You need to have a human resources that shows how you are, what are the policies and procedures that your company, not the government, your company has in terms of treating employees and other people, your payroll, how much you are distributing and paying the employees, okay, and how much you are withholding for taxes, not just federal, but the states and some local state taxes. If the people are outside of the United States working, how you are dealing with the taxes, accounts payable, when you have vendors, consultants, and individuals and subcontractors, they're going to be sending you an invoice. They're going to be sending you information that have to match this entire accounting system. Subcontracting and consultants, the same thing. Do you have a written subcontract agreement with also your consultants? Your contracting department, is that contracting department, regardless of how small you are, following the rule of the law for the federal acquisition regulations that you are passing to your subcontractors? Or if you are a subcontractor, is that real legal? I have to tell you, I have several clients that what they have are subcontractors, and when they send this is what my prime send me, sometimes I tell them, don't sign it. Don't sign it because it might not be in compliance with that. And that's part of what you need to be very, very, very careful. Billings and invoices. Billings, how much are you billing? How the frequency of your billings, the information and supporting documentation that needs to go into your billings. Purchasing, if you've been hired by the government to purchase certain items and equipment, how are you purchasing? That's why sometimes even the purchasing becomes a system by itself that you need to tell, hey, if I need to buy 10 laptop computers, what procedures are you following instead of buying laptop computers that cost $900 versus laptop computers that cost $5,000? Which one is better? Not necessarily mean that you need to buy the cheapest one, not necessarily mean that you need to buy the most expensive one. But what is your purchasing system and criteria that the government can accept? And that if the government accepts it, then you're going to get paid. If the government do not accept those issues, you are not going to get paid. And you do not want to end up with 10 computers for $5,000 that the government is not accepting because you might not be able to return those computers, as an example in here. Okay? So once you have a good accounting system, move to the next slide, Angela. And you have an auditor from DCAA, for example, reviewing your accounting system in there. This is usually one of the most typical process that they are going to be seeing. The auditors, usually the first thing that they wanted to start reviewing it is what is called your labor distribution, especially if you are in the service area. Why? Your payroll becomes between 60 to 80% of the cost of your company. Therefore, the DCAA auditor or the DCMA auditor, because I have seen it in both, is going to take a look at your company finances and reporting. And what they want to make sure is that you are in control of the company expenses. Yes, payroll is an expense of the company. What you pay to everybody is an expense of the company. So if you say, yes, I am in control, they're going to tell you, show me. And that's the most important part. They're going to tell you, show me. And they're going to be taking screenshots of everything that you show them. When you have a timesheet process, that's the first thing. Are the employees, consultants, and other individuals completing the timesheet by each employee on a daily basis? Yes or no? What does that mean? That every day that the employee starts to work, all the timesheet has to be completed as of the day before. That is very, very, very important to have and to understand. Do they have the correct charge codes clear and accessible to all the employees that needs to access them? Yes or no? By the end of the period, the employee needs to sign the timesheet, and that signature has to have what is called a statement that says employee certifying that the allocation of times are through and correct to the best of their knowledge. Why? Because there might be no items and issues that they do not know. Okay, so and that's why they wanted to make sure that signatures can be the physical signatures if you have paper timesheets, or an electronic signature if you have electronic timesheets. Then that information is sent to the company assigned supervisor to do what is called the approval of the timesheet. Once the supervisor reviewed it in detail and it says, yes, this is the correct allocation, the supervisors needs to sign it and approve that timesheet. And they also has another statement that says supervisor approve or reject the timesheet. If approved, then the supervisor's an employee, okay, and the supervisor's employee the timesheet approval, and if rejected, it must make a correction to resubmit the process. And they will audit that process. They will go in detail with that process. Part of one of the sub items that they may make at any time is what is called is what is called a timesheet daily report audit. Remember, they say it has to be reported daily. They may show up at your company unannounced, and they will tell you, we are here to do a report on you if your employees are doing the audit on a daily basis. And they choose several of the supervisors and it says, open the timesheets. Let's see if your people are completing the timesheet on a daily basis. That's called a floor check, okay, in the regular matters. Now, after the supervisor approval that, then everything is submitted for processing and payment to the accounting department, okay, or the finance department, or to your HR, whomever you have chosen then to produce that. The employee salary then is distributed among all the different cost objectives in the accounting system. That process is called the labor distribution in there, okay? This, in this entire process can be review each and every time, and allow the individual. This is the process that you need to show, okay, that it is a good show me at that stage, and understand the different responsibilities that you have. And I'm going to tell you, the most sacrosanct document that if your employees sign it and the supervisor approve it, and if there is any error, the accounting may detect it, but if you don't go back to tell them this is wrong, you can go all the way to the Supreme Court of the United States, and they're going to tell you, the employee sign it, the designated supervisor approve it, okay, and they will prevail in whatever issues that you may have in there. So this is one of the most important lessons that everybody needs to understand. And DCAA will go through that. Now, understand, sometimes your company might be in one state, but you are operating in a different state. Your timesheet system has to take into account in which state you are operating, not where the company is located. This is important between the exempt versus non-exempt and how much to pay those exempt and non-exempt, the overtime ruling requirement that are different for every state. Also, if you are having employees that are subject to the Service Contract Act, how you are treating those employees with the Service Contract Act and the allocation of costs on the Service Contract Act. If you are in the construction business, you may also be very knowledgeable about what is called the Davis-Bacon Act, and you need to make sure that you are complying with all these costs and regulations. And it has to be so well detailed that not only will pass a DCAA audit, but also will pass a Department of Labor audit and a Department of Labor from the state or the county that you may be operating. That's why it is important into this act in there. So the second and the most important part is, are everybody following your internally developed employee manual on how to treat these costs and how to treat each employee, the subject of vacation, non-vacation, etc. You need to develop that compliance report for your company. And it's extremely important that those issues are reflected in here and they are not in collusions with any federal, state, or local laws in there. That's why the manual that company A may have may not be feasible for company B because they may be operating in a different state. And I'm going to give you an idea. I'm not sure if some of you are in California. That is one of the most complicated states when it comes over to overtime rule. Okay, read it and understand it, and you need to you need to make sure that this is a correct representation of what your company ruling is required, okay, in each one of these areas. Okay, so if you take a look now, after you have all these issues, let's take up the next slide, please. This is an actual labor distribution that you see there on the left. I tried to summarize it on the left that says, okay, I am in a small business. I have several contracts, and these are all my direct labor based on the hours, the time, and the cost. And then you have there how many hours have been allocated to G&A, to holiday, to overhead, to G&A, okay, etc., to training, to the different holidays, and to the different areas. How many people took what is called leave without pay? Leave without pay is literally that they took leave and they are not expecting to be paid, and how many people took actually paid time off. In this case, the projected total hours and cost is the 29, 595, and 63. Okay, and from the payroll report that you have in this case, for example, this company used a payroll company called Rippling to develop the payroll journal. And then when you look into the second page of the Rippling, it says, yes, based on this information, you have the people with the best pays, with the salary. And when you add all that, you get in there what I'm highlighting in red, that the gross payment matches the gross from the payroll. This report, DCAA and DCMA will ask you, and it has to match to the penny. It has to match to the penny. And this is extremely important for DCAA because remember, this is the cost that you are paying to all your employees, and you may be included in that cost. In this case, for example, in the Rippling, they tell you, well, there is an owner in there that is receiving a benefit that is called the S corporation benefit, but notice that is part of the report, and that's why we are making those inflections in there in between the two reports. It has to be perfect in that sense. When you ace that, remember, as I mentioned, usually if you are in the service area, payroll is 60 to 70%. And they're going to do this not just for one payroll, they may do it for the entire year of the payroll and all the contract costs. If you ace that portion, you are done by 60 to 70% of the cost of your company. That is the most important issues in there that you need to have. So once you do all your different allocations, okay, and once you have all these items in there, okay, then everything gets moved into what is called a job cost ledger. Oh, sorry, I went a little bit ahead. So once you are into a pre-award audit or a post-award audit, this is how DCAA or DCMA will start looking. It's called the Standard Form 1408. You will receive a full standard form. It's usually 2 or 3 pages, and it has several questions. This is just the beginning of the contract system. Okay, and we're going to be making a lot of references about this 1408 system in there. Usually you will start with this process and then you will going to go. And the most important part that DCAA will be asking for is how do you develop your cost job, your just cut ledger report. Okay. But take into account that once you are responding to these items, the auditor may have questions or comments in each one of these areas. So I always say very caution. Don't say yes, 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 because each one of these questions and each one of these yeses have a show me, show me, show me when he's in there. Okay, so you do not want to fail the audit if you cannot show me what he's doing. And remember, for example, that labor distribution report that I show you in a very, very summarized way, the reality, the labor distribution report, it will have all the different allocations for all the different projects, project A, project B, project C, how many people working there, how many ones. And sometimes they even ask you, oh, I see that person A working 6 projects and he made $6,666.66. Can I see the pay stub for this person? They will ask you for that. And if you cannot show it right away with just one click on one item to say, yeah, here it is, this is how much the person was paid, you are not doing a good job. Just want to let you know. Very, very, very important. Okay? So the 1408 has what is called a narrative report in which you can make remarks, issues, okay, or mark, some questions and areas that you may say this is not applicable. And you will see that as part of the full 1408 that you're going to receive. I'm going to send everybody the full presentation in a PDF file that has everything that I am mentioning in here and some additional items at the end of this presentation, okay? But what you are doing with those things is minimizing your risk. And minimizing the risk is what you wanted to have. You want this audit to say, show me, oh, yes, this is okay, check. Oh, yeah, this is okay, check. The more easy checking that you can do, the more you are acing this report. One of the, if you move to the next slide, Angela, you're going to see that in that report, as I mentioned before, there are several different types and expectations of DCAA audits. Your accounting system takes the top notch above, and that's part of what you are expecting. And of course, take into considerations that it show you in there what percentage were based on the revenue and the different years, how much they were looking for, the purchasing system, estimating system that we mentioned before, and even the accounting system, and how frequently these items be. The fact that they came in last year doesn't mean that they cannot come back the next year or even the next month if it's necessary at that level. Now, the more money you have, the more audit system you are going to be having in there. So that is a rule of 1-to-1 in that sense. However, everything in there then just lead you, okay, into what is called, well, the next slide is also different type of expectation of DCAA audits.
I wanted to add in this slide that DCAA generally also has two different types of audits, a pre-award audit and a post-award audit. They are similar, but the post-award audit is a lot more intrusive than the pre-award audit. The pre-award audit is generally, can your system do this? Show me some examples. The post-award audit is, show me how your system is managing the contract that we're auditing and how your policies are applied across the board for the entire company.
Yeah, very important, the pre versus the post. The post usually takes more time and is in far more detail. Okay, the pre-award is just, okay, it's just sample, sample, sample. The post-award is actual reality, actual and reality.
We have a really good question in the chat. I'm going to voice it out. Really, really good question. Is the post, I'm assuming, award audit the same thing as a tabletop audit?
I have never heard the term tabletop audit before, to be honest. It might be the same, but I don't want to say yes or no. Okay. Top audit last year, yeah, that is the tabletop audit last year. It may be a post-award audit in that case. See what Christopher is referring to in there.
Some auditors, depending on which office they work at, they do have their own colloquial terminology for what a pre and a post award audit is. In regular business sense, pre-award audit is, hey, you are on the short list to be awarded this. We want DCAA to vet your system. Post-award audit is, hey, you got awarded, you're performing. Show us how your system is doing against your incurred cost submission. I have heard that some DCAA auditors do call it tabletop audits on the post-award. And usually tabletops come after the first audit. They will do a post-award audit at the beginning of the contract, and then another post-award audit near the end or after the contract ends. Usually those are the tabletops. Like, you told us that you're doing this at the beginning. Are you still doing that? And if you made any revisions, why, how, where was it reported? That's usually how the sequence of events goes.
That is correct.
Okay, going back on mute.
Show the next slide that has some more detail of the type and expectations of audits from DCAA. Okay. This is audits that went over through the last year, including none of the above audits that you can see. There are other audits that do not fit in there. Notice that they are cash compliance and disclosure review, and they are incurred cost submissions report taking the top audit. Especially in the incurred cost submissions report, is supposed to be a voluntary items. Is very mandatory if you have cost plus contract and T&M contract. Is voluntary if you only have fixed price contract. However, it costs some money to prepare your own audit, but the important portion of the ICS report, incurred cost submission report, is that when you represent to the government that you say, I have a fringe of 32% into this proposal at the end of each fiscal year, your fiscal year, not the government fiscal year, your fiscal year, they are expecting to see something to the nature of the 32% fringe that you are submitting in there. Indirect rate costs are very variable because it just depends on the situation of your business. You win more contract, a lot of your indirect cost rates will go down. You lose some contracts, they will go up because of the relationship between the numerator and the denominator. Um, we did we did also with the veteran administrations what on how to manage and deal with your indirect rates that I believe is still available in YouTube if you know that. Okay, but some of you may have seen it, done it. Okay, but you can actually see that one also in place in there. Okay, uh, now we are in here into what is called a job cost ledger reporting system. What you see there is an actual job cost ledger on a contract that took place in 2013 and 14. All the numbers that you see there are actual. The only thing that we just did is that we just changed the name of the company. We don't say this is part of the defense government contract. And as you can see in there, I like this one because it has all the different areas: labor, material, subcontractors, travel, other, they are all in there. There is a budget. You may say, where does this budget come from? Is whatever you submitted into the to the government that it was going to cost. And then you have there all the different indirect rates, fringe overhead, and the typical G&A, the typical three pools that you have, and then you have the total cost, and then you have your revenue, and then you have your fees, which is the difference between revenue and total cost in there, and how much is that percentage. Notice that this job layer report only has a contract value at the top right, funded value that is very different than the contract value in most cases, and the total projected and the total funded value. This is a cost plus contract, by the way. Notice billing type at the right edge is CPFS, is cost plus fees fee, and how the fee is being calculated, etc. And it also has at the very bottom what is called percent of funded value used and percent of of time that have elapsed from the beginning. Notice that in this job ledger report, it also says that this contract is supposed to go for this particular claim from March 11 to February the 10th of next year. And this cost ledger report is produced as of December 31st, 2013. We are also at the intermission level. And what I want everybody to do is to read and understand this cost ledger report, look over everything, all the accounting system, DCAA review this company and say, yeah, this company is good to go, etc. But what is the importance of the cost ledger? The importance of the cost ledger report is to tell you how good or bad is your project doing. The important part in this one is that it's a cost plus type of a contract. This project is making money. Notice that the profit is in there, no doubt about it. Profit is in there. It's about $78,000. So it's profitable. Everything is good. However, there is a big problem with this cost ledger report. And we want you to take some time during this intermission to review that. And we have some questions or some items for you to take a look at this. If you can move to the next page for the moment, Angela. And these are the questions. Multiple choice in there. Choose one from the options below. Okay. Based on my analysis, this project is doing fine. It's making money, and I see no problems. B, there was no budget for travel or ODC. The contractor should have not spent that amount. C, the profit is too low based on the actual versus budget. D, all of the above. E, the contract is running out of time and the contractor may not be able to complete the task. Remember, this is as of December 31st of the end of the year, and the contract only has 40 more days to complete the job. Thus, the contract ends in February the 10th of the next year in there. So I want you to take a look at this level of items and questions, and we're going to take a 10 minutes break, I would say. Okay, for the people can answer these questions, etc. Okay, and then we will go back so people can then go over and answer those items. So I'm going to put myself on mute. Okay, and I'm going to stop the video too. So, but you guys can then take over and realize what is the most important portion, because this is the heart of what DCAA is also looking into this.
Great. Thank you, Mr. Linus and Angela. At this time, we're going to take a 10-minute break, but during this time, we ask that you please review the ledger and answer the question. The job cost ledger report on the previous slide is real job cost status report from a contractor that ended. While the performance of this contract seemed to be going well, profits and etc., it has a big problem. What problems can you identify? We will now launch a poll open that will be open for the duration of the 10 minutes. Please engage and take the time to answer the poll and submit your poll. Thank you. Welcome back, Mr. Linus. We have about 20 seconds remaining on the poll.
Thank you.
Are you able to see the responses and the replies?
I've been able to see the submission on the polling. I haven't seen the
Yes.
responses yet.
Okay, the poll has now closed. Thank you.
So what are the results of the poll?
Oh, I can provide you with that. I'm sorry. I did not capture that during the session. I can capture it post the event. 13, I know responses were a B. There were no travel costs and ODC's costs, so the contractor should not have not spent that money.
Did anybody choose E?
No, sir. I did not see E.
Thank you. That's the most important part. Because a job cost ledger report is not just to tell you how much the project costs or how much the things and stuff. It's an actual barometer on how well or how bad the contract is doing. In this particular case, this is an actual case. The company was dinged not because of any one of these costs, but the correct problem in there was E. The contract was running out of time and the contractor was not able to complete the full task. And let me tell you, in addition to being this just an actual case, this was the first year of a 5-year contract. And the contractor performed so badly and that he did not spend all the money and all the time and all the issues that the government decided not to award any of the optional years. So the contract was actually terminated for convenience to the government, or we'll say not terminated, but non-renew for the additional time that they have. This is the importance of the cost job ledger, not only to tell you how well or how bad that you are making money, losing money, etc., but also to tell you, okay, what is happening. If you take into account and you look into the column that just show, below the net margin, yes, that's okay. The budgeted amount, okay, everything is doing well. It's doing a little bit more money than the budgeted amount, but the percent of the funded value, company has only spent 71%, but the percent of the time elapsed is 88%. They are way behind the curve that they are supposed to be. This is what DCAA and DCMA needs to make sure that your company knows and understand how to track all these items. And this is the importance when you see, oh, job cost, yeah, how much how much I spent. It's not just that, it's everything related to this. Now, granted, I have to say, this is a summarized project report for this contract that you see actually have 17 cleans in 1 year, and each clean has 5 to 6 lien into there. So this is the summarized report for the overall contract. But that was the most important issue, that the project control in here kept saying, guys, we are behind, we are behind, we are behind, and how well this is reflected in the Just Cop Ledger report. Not just if you are making money or if you are not making money. If this contract was subject to EVM, earned value management, it will be very well shown that the contract was behind, because in the earned value management, you have to present a series of charts and records that it will tell you, yes, the contract is behind. This contract was not subject to EVM, okay, and the contract is not subject to, because it was not subject to EVM, even the contractor kept asking, can we put this contract into EVM? We rejected it and I say we because we were part of this contract as the project control management, because EVM is also very costly. And there was no physical time to do it, but we offer, if this contract is renewed, we may put it over into an EVM structure in there. That is the importance of making sure that you have a good and a great cost ledger report. Because it's not just to tell you the debits and the credits into the accounting, it's to tell you what is happening into the contract in this case. So this is the actual importance that I want everybody to see and understand in here. And that's what DCAA is going to be looking. Are you in control? Notice that I'm not saying if you're making profit, in control of your project. And if you are, then show it to me. And they will be able to look into all these numbers, all these areas in order to say, yes, you are in control. No, you might not be in control in this case.
To add on to what Greg is speaking to, we have another really good question in the chat. When you say the contract is behind, you're assuming there's a constant consumption rate of the money, which is not always the case. Is it? Remember that this report or this activity is not to determine if you guys were able to catch if the contract was in control or the contract was behind, but rather, can you whip up this type of report at any given time to show that you're in control and you're able to adjust? When this report was provided, again, remember, this is a real case scenario. When this report was provided, it was on December 31st, 2013, which is 40 days before the project ends. So DCAA will ask you to run these reports on a monthly basis, and your system run these reports on a monthly basis, sometimes even by pay period, to understand the status of your cost and how you, as the manager, as the owner, are able to make adjustments based on the information that the system is providing you. It's not necessarily the delay of the project, but how frequent do you run these reports as stated in your accounting policies and procedures to ensure that your contracts are not at risk?
And let me explain, because I'm looking at the chat and the questions right now. From Senia Florentini, that she's asking, yes, this contract was supposed to spend the money constantly. If it was not constantly, this is where the EVM will take a good place into it. So yes, the contract was behind by 14% in this case, as Brandon is suggesting. Okay, but in addition to that, we push for the negotiation of the modification, okay, to see if we can actually deliver, even though just 15 days thereafter. But it was so far behind before December, etc., that the government lost trust in the client. And it says, no, we don't think that you can actually pull out everything in there at that level. So those are the things that you guys, as the owner of your company, as the main principal person in controlling the cost, you need to have that very, very clear in your mind. And it has to be that, for example, this report was produced on January the 10th, when the company only has 30 days to perform into the contract as of December the 31st. That's why the speed and the accuracy of producing the report on the system are extraordinarily important, because by the time that this report came out, the company only has 30 days to perform. And to find out that you are still so far behind, and trust me, 4 months before that, they were like a 40% behind, and they were trying to do a great effort. And remember that, in every contract have the deliverable report, and this was required to be submitted to the government every 30 days at the end of the month, no later than the 10th day of the month. And it was a very good progress report, but not enough. And the company lost the contract in that case. I don't want that to happen to anybody. And notice that this has nothing to do with the profitability of the cost, but it is part of the most important issue. What is your cost ledger report telling you how far or how close you are? And trust me, if some of you think that QuickBooks can do this, you are dreaming. QuickBooks cannot do these things for you so far. Okay. So let's move on then to the next. Can I address the G&A? G&A stands for the General and Administrative Cost. And as you can see, yes, it is far more than what you have, but sometimes you have not too much control in the G&A because the G&A depend on the basis. And as I say, you may say that this contract may end up costing me only, in this case, 13.83%, but ended up costing far more than that. And that's why the G&A was overrun in that case. What controls your indirect waste is the overall management, not just in a specific contract, but in the overall contract. If you have a problem in your company that all the contracts are being overrun because of G&A or overhead, don't try to solve it within one contract. Try to solve it within the overall company, because that is one of the conditions that DCAA and the DCMA wants to see, which is that the policies, the accountings, and the process are applied to the entire company at the exact same level. That is extremely important. The fringe, overhead, and G&A has to be applied to the entire company. You may have certain deviations in your fringe. You may have multiple different overhead costs, but you have to be consistent in that. If you are not consistent, DCAA will not approve your system because they're going to tell you you are not consistent. That is the most important issues in there that you need to review and make sure that you are being consistent and prove it to the auditor that you are being consistent in all your regulations. I have companies and clients, for example, that have more than one fringe pool, a high and a low, because they have two different sets. That is perfectly legal. They are consistent in terms of when to move one client to the high fringe pool and when some clients and some projects and some individuals may need to be into the low fringe pool. At the same time, you may have two separate overhead pools. You may have a pool that some people call it when the people are working at the government side and when they are working on the client side. Now, after the COVID, these issues may come back very strong because they are asking everybody to come back to the government side to report and to work. And a lot of those have different levels of cost. But no matter what, you still have to be consistent. Can you have more than one G&A? Most of the time, if you are a very, very large company, you may end up having more than one G&A cost. Cool. Okay, but not if you are in a small government. If you have G&A expenses for resources that are not being charged to the government, can those resources be allocated offshore? It just depends how you define those costs. Are they allocated to what is called unallowable? And take into account that once you choose certain costs by the cost type to be unallowable, will always be unallowable in your system. Okay? An operational cost not related to the awarded contract? Yes, absolutely yes. These expenses just, tied to the G&A, and we don't necessarily have to break down the costs. So you still have to break down those costs. DCAA can look into anything. Now, if you have a large amount of costs that you're saying this is unallowable and I don't want to show the detail, let me show you, okay, But take into account that any other cost that is similar or the same as this one, it would be associated as unallowable. By your choice, not by the choice of DCAA, by your choice in that level. But everything that you are charging to the government, they have the right to see and understand to every level of details how it is. Okay? That is correct. The DCAA will look at the whole company, not just the contract in that case. Oh, it's Angela that is saying that. Okay.
I'm trying to respond to the question.
Yeah, thank you.
Type them in. Sometimes I have to. They type too fast for me.
Yeah,
Um,
I did not notice that it was you that I was answering to that. Okay.
Not a problem. So
Okay.
just to reiterate my response regarding the GNA, remember that the purpose of running a job cost ledger report is to show you the reality of what is happening, not what could happen. So the GNA being so high just tells you that you underestimated the GNA applied to this contract because your reality was a heck of a lot higher than what you budgeted and estimated. So it doesn't necessarily skew it. It just tells you the reality of how your contract is performing against the operations of the business. That's what GNA is. The running of the company, not the running of your contracts. Overhead is running your contracts. GNA is running your business. So it's taken a heck of a lot more dollars to run your business than it is to run your contract. That is essentially what this is saying.
That is correct.
I hope that made sense. Okay, I'm going to go on mute again.
Thank you on that, Angela. Okay.
Absolutely.
Let's move on to the next slide after this. So that's exactly part of what we're talking. What is the importance of the indirect costs that we have in here? Well, as mentioned before, and is mentioned in FAR 31, any cost that is not directly identified with the single final cost objective is called an indirect cost. Now, most of the time we are choosing, and this is how the government loves to see them too, not necessarily that you have to do it, but we are choosing to have different pool costs that can help you to determine how good, effective, or managing the indirect costs. And that is something that we actually even have some classes and some items related to that. So normally we divide the indirect cost in pools. We have a fringe pool that accumulates all the associated benefit costs that we provide to all the employees. We have an overhead cost, like Angela very well defined it, that is the cost incurred that only benefits an identifiable unit or activity of the contractor internal organization, such as engineering, manufacturing, this type of a job cost, etc. Okay, but it's only available if you have a contract, i.e., if you do not have a contract, you do not have overhead costs. So you need to have a contract type on a cost in order to understand and say, yes, I do have an overhead cost. The GNA costs represent the activities that are necessary to keep your business operating. So the moment that you become a business and you open for business, you start having GNA costs, contracts or no contracts. That is the nature in there. And again, for example, yes, if you take a look at the behemoth corporations like the Lockheed Martins and the Northrop Grumman, they have more than one GNA type of a cost because they say, hey, we have a division that manages all the aerial, the aerospace division. Well, they have their own GNA cost for the aerospace division, but they may also have a GNA cost for the overall management of the direct corporation in that case. There are other common expense pools that can happen and that you probably have seen it, okay, depending on the size of your company. If you have a lot of subcontractors, you may have what is called a subcontractor management pool. You may also have, if you are in charge of buying a lot of equipment, or a lot of material. You may have a material handling pool. Some people get confused that the material handling pool is also a subcontractor pool. It's not. You can choose to have it together, okay, but you can choose also to have it apart. There is also one pool that sometimes is not very well understood, that is the facilities capital cost of money. You may say, is in that interest? In part, yes. What happens is that if the government is asking you, for example, I'm going to use the most common example. If the government is asking you to lease a building, a warehouse, a large space, when you go over to lease that, you have the lessor is going to ask you, hey, you need to give me a deposit of $500,000 during the time that you're going to have this. Well, that $500,000 is coming from your working capital, and it will cost you money not to have that $500,000. That's when the facilities capital cost of money will apply to you. Not very, very common. I've been in business since 2009, and I have multiple clients, and I know very well because in the past, for other business that I've been the chief financial officer, I have used the facility capital cost of money. Right now, none of my clients are using that facility cost of capital. You cannot just say these are my regular interests. And by the way, that's the reason software have, because interest in the name in the FAR 31 is considered unallowable cost in there. Okay. So these are the normal areas that you need to do and that you need to take into account, especially as I mentioned. Notice that in a lot of these items we are talking about the FAR 31. FAR 31 is everything. FAR 31, as I mentioned before, is going to become your best body business to understand and to put it over into how you are going to do. One, in a lot of this indirect pool cost, I have seen many clients that say, well, this is how I want to divide it. This is what I think I am a genius. I'm trying to reduce my cost. My professional recommendation is do not try to reinvent the wheel if the wheel is already being invented. Because some people decide to do these other things, they ended up unknowingly not recouping all their indirect costs into the contract. And remember, during the DCAA audit, they may notice that you are not recouping all your costs, but this is how you choose your company to be treated. And because of that, they're just going to say, is this exactly how you want it? Okay, approve. They don't care if you are losing some of your money because your indirect cost is not correctly allocated. Okay? But they are just simply saying you cannot apply for one contract A or for one contract B. You have to be under the same consistency in there. And I'm going to give you an idea. The FAR regulations allow you to load G&A on, for example, on travel regular expenses. GSA does not allow you to load G&A on travel expenses. But if you decided not to apply the same rule that GSAs have to non-GSA contract, they're going to look at it and accept it to you in that way. And if you ask me, yes, you are leaving money on the table in there. I.e., it's a cost that you can recoup, but you are choosing by your own policies not to do it. In this case, not to have it. And that's why you have to be careful, because those items have to be embedded in your accounting manual for policies and procedures on how to allocate the cost and how to deal with the different costs that you may have. That is when you are entering into an audit, whether it's pre or post award, that is the first document they're going to ask you. Can I see your accountant manual, policies and procedures? Can I have employee manuals and procedures for doing that? That's the first thing that they will inspect. The number one first thing. If you don't have it correctly, make sure that you have it correctly. Because remember, once they ask for that, you want just to give it to them right there. whether it's by email, in person, physical, etc. in there. Okay? So, and as I say always, they are always going to reimburse you for all your costs, direct and indirect. Especially in a cost plus contract, that is the key. That is the key. You may hear a lot of stuff in there, people saying, oh, they never reimburse that. They do. At least all of my clients have been able to recoup all of their costs, direct and indirect, before and after the contracts. That is key in that sense. Let's move to the next slide, Andrea. When should I start with a compliance accounting system? The best answer to that, and I always say, is now. Don't wait. Don't wait, because if you wait, you are wasting your time. You want to start capturing the cost of every necessary item, and that you need to track them and have the ability to justify them. Sometimes it may have nothing to do even with a government contract. Last week we were talking to a client, and and we were mentioning to them, you want to justify your what we call the sweat equity. That's the best way to justify the sweat equity, the time that you are putting into your company and the projects and the contracts and your inventions and items that you're doing. Okay? So it is important that you have the ability to do that, and that you have the way to show up the entire accounting and cost for all this process. DCAA or no DCAA. Second, you're going to be meeting all the compliance requirements from the very, very, very beginning. So you are not just explaining the methodology. Remember the show me state when they walk in. You are just showing to them and why it is working perfectly and correctly. Again, I say you want that auditor to come in and go out as fast as possible. And the only way that he can do that is if he's just check all the check boxes necessary, and they say this is correct. That's what it's called a strong show to DCAA, when you can prove that you are already doing the work. Not just saying that you will be doing, but you are, hey, I'm already doing this stuff. So don't wait until DCAA comes over knocking at your door. Because if you wait that time, it increases the time that you will have to pay an external, a company, okay, that give you the necessary advice, and that is increasing your cost. The fourth and most important part, that you are showing and always are in control of your cost. That is exactly when DCAA do the audit, they wanted to make sure that you are in control of your cost. Because remember, they are giving you what is called a cost plus contract, and they are giving you the authority to make this decision as if you are the government directly, for efficiency for the government and for yourself. So that is the most important part. I have to tell you, as part of the cost controls within your company, sometimes you need to make sure what your delegates have the authority to approve. And I have seen people delegating items that they should have not delegated. And before you know it, people are authorizing, when you say, hey, I need to buy a car because I need a car. But what kind of a car? A Toyota Corolla? Or do you need a Ferrari? And trust me, I have seen both. Okay, that they buy the right car, and they say, well, I want to buy a Ferrari. Nobody says that I cannot buy a Ferrari. You say a car. What's the difference in the cost? Several $100,000. And yes, and DCAA has been involved in some of those audits. There was a famous audit that happened several years ago of a contractor that have a base in Dubai, and they decided to buy Ferraris and Lamborghinis, etc., for everybody working in there. And of course, they thought that they were getting away, until the DCA auditors came in there and says, nope, you cannot do this. And they were required to refund and return some of this government costs in there. That is the most important issues that you need to have. And second, if you say you are in control of your costs, and somebody say, how the heck do you allow them these Ferraris and Lamborghinis to be purchased without your knowledge? Therefore, if you do not have that level of cost and control, then you are not in control of your costs. Next slide, please. So, many people says, how can I prepare for a DCAA, DCMA audit? I always says, pull down the SF 1408. Look at two other questions. Don't just go in there and click yes, 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 yes to all of them. Go internally by yourself into a show me a stay with the proof that for every item that you are clicking a yes, you can actually show that quick and fast. And seriously, quick and fast. The last time that we went into a DCAA audit, it was a post-award audit. We went to the entire 1408 in one morning for one of our clients. And we were able, now the entire audit actually lasted close to 3.5 months because they were asking for a lot of reporting. Remember, it was a post-award audit. But the first 1408 that they wanted to go over through, we went that in one morning. Started like 9 o'clock, 8:30 in the morning, I think it was. Angela can remind me. And by around 2 or 3 o'clock, okay, in the afternoon, we were done reviewing the 1408 and all the issues.
I called it the kickoff conference to review the 1408. Started at 8:30 in the morning, and we were done by lunchtime. And then we started the show me stage that afternoon, and by 2:30, the auditors had over half of the material they needed, and then they just provided continuing questions based on the reports that we provided.
Exactly. So, second part, very important. Remember, you're doing it internally for your own company. If you do not think that you can click yes, that you have that, and you cannot be totally convinced that you can show that, that means that you have a problem in your system. And you can then start saying, okay, these are the issues that we want to start working. Because when they tell you, do you have a labor distribution? Yes. Can you show me which one for what period? Ending in February 15. Here it is. Click, produce the report, give it to them. Print it out and give it to them. That is what I call one click. In semantic terms, Angela was telling me yesterday, sometimes you have to go to 3 clicks, but yes, it's just a click away. That's what I mean. If you cannot do a click, okay, just right away in there, you cannot do it, okay? Third, and very important, okay? Analyze your accounting system. See if you can get the satisfactory report on everything that you know DCAA and DCMA is going to be asking. And by the way, there is no mystery. You can go to dcaa.mil and you can go over and download what audit procedures they're going to follow, and they're going to tell you in there all the processes that they are going to be following. Auditors cannot deviate from that area. If they deviate, they are not doing their job. Have that happened with DCA auditors? Yes, I can tell you have happened. But you need to be very well prepared to tell the supervisory auditor, I don't think that this is applicable. And let me explain to you why. That's why you need to be very well in the domain of what you are doing and what you have done. Okay? So this is very, very important to understand between the second and the third. If it's less than 3 click mouse in your system away to do this report, you don't have that report. I remember, for example, one time that I asked somebody, can you produce your indirect rates report? Oh yeah, I have to do this, take it at export, and then do these calculations, and then run this report, and then divide it, and do the things, and maybe in 2 days I can give it to you. And I have to tell them, I'm sorry, you don't have it. What? And says, no, you don't have it. An indirect cost rate report, which is important from the management point of view, not just for DCAA, is because sometimes, and trust me, we all have been in that situation multiple times. You need to make a decision in 10 minutes or less. Can you do this? And this is relevant for your indirect rates report to understand how to do it. Okay. And if you don't have it in less than a click, that you can say, how much were my indirect as of, let's say, we are now in February, as of January the 31st. If you do not have that, you do not have a good system to report on your indirect rates. And number 4, any deficiency that is found before the CEA, the DCMA auditor is at your office, make sure that it fits. Correct it, improve it, and run over this month, next month. You don't have to wait for the DCA auditor to come over and start fixing these issues in there. So what is the most important part in there that I always says is that pretty big bold that I have there at the bottom. Is not what you know, is what you can prove to the auditor. Prove, do you have this? Yes, that's what I call it, the strong show me. That you see there into the very first one. Do you have a labor distribution that matches? Yes, here, print. Show that labor distribution from your accounting system. Go to your payroll provider, show the same report, match to the penny, like I was showing in some of those slides before. That is what is important to show. And that is what you can go internally without having the pressure of the auditors in there looking you strangely to say, I don't think that you have this. That is what is important, to have this ahead of a time. Okay. Second, they will always look to the past, and they assume that whatever happened yesterday is going to happen again today and tomorrow. So if you have bad information but you fix it, show them not only that, show them that you were able to identify the bad information and that you fix it, that you have done the entries and that your accounting system is now in full compliance with the correct cost reports in your company. They will know, and I said, nobody is perfect, and they will know and understand a lot of these issues all the time. Let's move to the next slide, please. This slide just simply tells you the type of audits that DCAA and DCMA will be doing for you. They look the same, and they relate, but most of the time DCMA depend on the results of audits that DCAA have. That's what it says in here, DCMA follow up on all DCAA audits. Okay, and you can see incurred cost submission, set for audits, audit determination, indirect rate, settlement of indirect cost rates, final precedent submission, termination settlement for proposal. They can also do what is called a financial capability audit. They say, hey, for us, you are very small. I don't know that you can actually handle this $250 million contract. Show me how you are planning to do that. Less than about 30 days ago, I have to do that for one of our clients that was very small, and they were awarded a $225 million contract. And they have, and the government has doubt that my client could perform in this. So we went through what is called a financial capability, and it can be pre or post award audit in that case. Analysis of the current company financial conditions. They will audit you if you say, hey, I'm depending a lot on subcontractors and consultants. They're going to analyze your accounts payable very, very, very strongly in there and says, hey, wait a minute, but it looks like you have money because you are not paying your vendors or your consultants or your subcontractors on time. Okay, There is also something called, some of you might be familiar with it, what is called the Administrative Contracting Officer, or ACO. When most of your contracts are with DCAA, with the Department of Defense, the DCMA will become your ACO, and they will assign one person within DCMA to be your ACO. That is important because sometimes you may get a contract with HHS and they say, "Hey, have this been reviewed? Have the contracts department issue an indirect rates approval?" And you say yes, and you can refer your ACO to that purpose to these other agencies. So, and remember, is this happen if and only if the majority, if 50% or more of your contracts are with the Department of Defense. Okay? So, this is kind of a self-explanatory in these issues. Every one of them, okay, have what is called a contract audit follow-up, or CAFU, as they read it, especially DCAA or DCMA, and you can go to each one of the areas, okay, and where to obtain the CAFU, okay, for the follow-up, and what you may need to do in order to get this entire areas of financials. And in the PDF booklet you're going to be receiving, there are several examples of CAFU in there also. Let's go now to the next slide, Angel, please. Myth that all of us, one time or another, have heard about DCAA or DCMA. The very first one, I have heard this a lot. DCAA created and interpreted some of my company's business rule for travel and expenses differently, and is now creating havoc. No. What happened is that most people, when they say we are following the, especially for travel, you say we are following the federal travel regulation. That isn't exactly federal travel regulation. It's not what you thought that it is. It's actually a document, and you choose to accept that the federal travel regulations as your travel policy. Before you say that, go over and download that from GSA. That's where you normally can find it, to see how it's really affecting your company. I'm not going to give you an idea. Many companies says, well, we are going to follow the federal government travel regulations, but then they go and they say, no, you need to show me all the costs, and they are not willing to pay the full amount of all the GSA per diem rates, etc. Items, and they do not know how to control or deal with the per diem rates. Learn it, understand it. They are no mysteries in there, but you need, in your company, you need to understand what you are saying before you say that the problem is the auditor. Second, I have an approved accounting system. The salesperson who sold it guaranteed that it's approved by DCAA. False, 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 false. DCAA do not endorse any accounting software coming out of the box. None, zero, nothing. Now, they have to entrust with certain software that say, yeah, it's easier to do it in this system than to do it in this other system. But no salesperson that tell you that, hey, this is a DCAA approved accounting system, you can tell them you're lying. And at least in my business experience, I don't like to deal with liars in that case. If they're lying to me now, they're going to be lying to me later on about the capabilities, etc., of the system. Third one, very common. My accountant for my taxes is a CPA, therefore DCAA must accept his view in my accounting system. Nope. remember your CPA that you're using for your taxes might be very good at reporting your taxes, which 99% of the time is in a cash basis, not in the full accrual basis. Second, the CPA just looking at your revenues and costs to determine how much is going to be your taxable revenue, your taxable income, not necessarily what is called cost accounting or activity-based accounting system. Believe it or not that many CPAs are very well versed in that. I have found many that are very, 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 very good, but they are also very, very, very expensive. Okay, in that case. So make sure that you can ask your DCAA, your CPA accountant if they know. For example, a few years ago, we were hired by a small business that was coming to an end of their contract, and they have to submit an overall incurred cost submission report. And I told them, okay, send me all the information, and we'll review them. But when I reviewed them, they were in the 5-year contract. The first 4 years was the incurred cost submission report was done by the CPA. It was done so badly that they should be able to recoup about $160,000 in cost that was left behind. But because the CPA that it was thinking in taxes filed it so wrong that out of this $160,000, they were only able to recoup about $30,000 at the end of the year 4. They asked me, can we try to fight this? I said, yeah, but it's going to be very costly. And the contractor has already signed, I agree that this is all my cost. So they make a representation that it was going to be very, very difficult to reverse on that in that sense. That's why you want to make sure that you know what you are doing in that case. And do not rely on your CPA alone if what they specialize is in taxes in that case. Second, the fifth myth. I don't need to follow the guidance of the DCAA for compliance. I can prove that my business is okay without all the gibberish from the government. You are absolutely right. You can do that. But the government may also choose not to do business with you if they are not confident. And they will issue a letter to the contracting officer that unless the contracting officer wants to share it with you, that's what the letter will say. Cancel this contract, do not do business with this company, the system. And I have seen those letters, trust me. They do exist. It's not a gambit, okay, but it's a reality. And those are the kind of letter that you do not want to have about your company. It's not sent methodically to everybody. It's usually sent to the contracting officer because remember, the contracting officer that requested the audit is the customer for DCAA and for DCMA. So you do not want to be in that level. 6. In order for DCAA to approve my accounting system, I have to purchase an expensive software system and implement it in my company. No. There are many systems out there that are not that expensive. Again, you can do it with an Excel event system if you know how to build it correctly. It is your system. The software is only one of the 12 to 15 components that you need to have. And the software, the only thing that it does is that it facilitates your services in there about what you need to do. So you do not need to implement an expensive software system like many people think that they are. Anyone can trigger a DCAA audit on my company. Not really. I have had people and vendors, I'm going to call DCAA and tell you to go over an audit. Every audit on DCAA costs money. On average, it costs the CAA between $25,000 to $30,000 to do a full audit on your company. Minimum. And who's going to pay for that? One time I had a client that one subcontractors wanted to get information on my client, and they say, if you don't do this to me, I'm going to call the DCAA and tell them to go over and audit your company. I say, yeah, please go ahead, do so. I actually want them to come in here. Of course, 2 hours later, he called me and said, yeah, you're right. They don't do it. Just like that. I did call them and they told me, no, sorry, sir, we don't do that. That's part of what you need to also understand. No anyone can trigger. They're going to tell you, yes, we're going to audit it. You're willing to give us, we send you a contract. It's a government agency, but they tell you, we'll send you a contract and you need to pay us for that. That is exactly what happened. All this money is coming from a special allocated budget that each agency has to request DCAA audits or not. And they act from one government to another, they act like if they had a business to. So, based on this, we are coming now to kind of the end, and now we are open for questions. You want to pick?
Great, thank you. Thank you, Mr. Linus and Angela. We do have time for a few questions. Mr. Brandon, are you able to facilitate, or would you like me to read the first question?
I'm good to go. It looked like Miss Angela have answered pretty much all of the questions.
Okay, all right. In Angela, did you have any closing comments or any questions that you might want to share with the audience?
Thank you, everyone. And thank you for being patient with me and responding all the questions as they were coming in. And like I mentioned in the chat, if anybody has any additional questions, concerns, comments, feel free to reach out to us. Our contact information is in this presentation as well. And we would be more than happy to engage in conversation with you. And again, thank you very much, everyone, for attending the webinar.
Awesome. Thank you. Thank you, Angela. Thank you for being on a ticker tape of questions on both chat windows. Okay, so thank you to our presenters for a very informative presentation and some good, healthy information and discussion. As a reminder, after today's event, we ask that you please complete a brief survey evaluating today's session. We also encourage you to continue to visit the Direct Access Program events page for upcoming programs that may be of interest to you and your network at www.vetbiz.va.gov/events. To everyone who has joined us today, thank you on behalf of the U.S. Department of Veterans Affairs, Office of Small and Disadvantaged Business Utilization, and the Strategic Outreach and Communications. This now concludes your session. We have a slide that's up now. Take a quick screenshot of it if you want it for immediate reference, but we also remind you that we will be sending the recording and presentation out to everyone within 48 hours of this session, the conclusion of this event. So thank you again to everyone who has joined us. Please feel free to contact us at the Direct Access Program at va.gov if you have any programming information or need further assistance. Again, we will send these slides out to you with a copy of the recording, and we ask that you please complete the survey at the conclusion of this event. Thank you again, everyone, and have a great afternoon.
Thank you.
Thank you, Mr. Gregory. Thank you, Angela. Thank you, team. Appreciate you. Great information.
The Q&A is captured and so is the chat. However, I don't see the polling.